Very good morning, good afternoon, and good evening for all those who are watching this video. This is Sinu Shivkumar from Yuva India Securities. Let us make your expenditure an investment. With this mission, we will start with this video about how to manage your money well. I have a very particular stock trading journal for you in this video. You can watch the entire video and understand what is a trading journal is all about. Without a trading journal or a trade book, you cannot invest or succeed in stock market. That's what I believe, because you need to understand how much money you are deploying in each trade or invest, or what is the return on investment you are going to make before buying or selling that stock. Or you can have a multiple look at perspectives about money and managing that money, whether the trade will go on your favorable side or it is going to be on opposite side, what you are going to do in that. All these things are curated in a single platform of Excel sheets. You can have this Excel sheet, keep it handy with you so that you can manage your money very beautifully. Let us understand what is it. Let us get into this video. My portfolio, this is not a great portfolio as such, because people have made so much money than that, but I have purchased few quantities, very minimal quantities on let's say 26 companies, and this return even after this COVID corona fall, market has crashed so much. This is my return on investment which I have bought back in 2018. The data is as per today, and consider this is only for educational purposes. I'll show you. First thing is, let's say two companies gave me an average return of 20%, which is ITC as well as Bajaj Auto. Four companies gave me a negative 27% of return on investments, which is Coal India, Ruchira Papers, Sun TV Network as well as Hero MotoCorp. On the other side of the coin, 20 companies gave an average of 113% on 4 years return. So let us understand. I have just bought small quantities, you can see here, but let's say starting from HDFC Bank, Infosys, Kotak Mahindra, Reliance Industries, all the way up to L&T Technology Services. These companies, see, especially L&T has gave me a 235%, wherein Adani Ports has gave me a 120%. Here also you can see that Asian Paints has gave me a 186% return on investment. Infosys gave me 199%. So overall 26 companies, these 26 companies put together 132% return on investments. Don't take it for granted. You cannot make always these kind of returns, but let me tell you one thing very important. Compounding is a great tool which you should understand and invest in India for long-term perspective. Let us understand, if you are investing today, what are the stocks you will be looking at, why you have to look at these stocks on a price action basis, what is the fundamentals about these stocks, and before getting into investing, just understand what is the money management which you have to do. So you have seen that, let's say 132%. How can you make this much return on investment in equity? Is it possible hereafter, or is it the past results are projected in the future growth? No, absolutely not. Do your due diligence before investing or getting into any kind of stock market investment. But I believe 2023 is going to be a great bull market in India. And what are the main basics about money management? How much quantity I should buy in a stock, or which stock I should purchase, when I have to buy, when I have to sell. You have seen all the technical parameters on the last video, last module. If you have not watched it, please go and watch the basics of understanding about candlesticks and price action. But if you are looking at a long-term perspective, you don't need to look at much into technicals and price actions. But what you can do, you have to manage your money very well. You have to make your losses even, if not profits, you have to make your losses even. This is the fundamental errors as a beginners we used to do. I have done this a lot and come up with a little bit of experience. I'm sharing you a happy new year trading journal for you, which will give you a clear cut indication about how you can invest in any stocks, or how much quantity you have to look for, what is the risk reward ratio you have to keep it, or what is the buffer amount you have to keep it whenever something is going wrong, or how much limit or how much quantity you should buy. All these things are curated in a single Google Sheets so that you can access them. Let us look into this beautiful Google workbook which I have created for you, and you can see that each parameters I'll explain in a detail, and you can also make a copy. Let's say you can just duplicate it and make a copy of yourself and give your name into it, so that you can update your portfolio or investment or trading, anything you can do here. Let us say first one, you are going to give which month you are going to take the position. Currently, I am going to take a position in December. In the week tab, starting from 0 this week on, considering the expiry, every Friday will be a starting date, week 1 and week 2 will start something like that. Every Thursday, the week will be closing. So you can also do this for options, and you can do this for all the expiry indices if you are trading in indices. Let's say, considering the fact 23rd, last Friday, is going to be your week number 0, and 29th is going to be the expiry date. So from the week 1 onwards, I'm just keeping it for namesake, week 0, and the date you can enter it on 26th. The day you can enter it Monday, which day you are trading count. If you are buying for one time, or if you are buying quantities, let's say you are aiming to buy 10 times as simple quantities. Let's assume you want to buy 10 quantities, you are going to buy 1 quantities each at a time. So you can mention here as a trading count is 1. What was the view on the comparatively last previous day? So it was a gap up opening happened, or gap down opening happened, or neutral opening. Considering today this was a neutral opening, what was the trend you have identified in the first 30 minutes of the trading terminal? Let's say today it was bullish, and how much conviction you have before entering into this particular trade. Let us say that you have, at least you should have 50% conviction, and if not, if you have more conviction, more than 90%, well and good. Trade entry, which entry you are taking. Let us say, are you taking a trend continuation pattern? Are you taking a trend reversal pattern at the top? Are you taking a trend reversal at the bottom? So I am keeping it today a trend reversal pattern at bottom, trend confirmation, bullish reversal pattern confirmation, bearish reversal pattern confirmation, or continuation pattern confirmation. So I am saying that it's a bullish reversal pattern is happening from the bottom. What is the Nifty spot price? Nifty has ended today at 18,014, and if you are using an option trader, you can have, let us say, CE and PE, call option and put option. What is the strike price? Trading index, Nifty options or Bank Nifty or stocks or intraday, whatever you are going to do, you can mention it here. So I'm going to mention stock swing instead of options. What action you are going to take? Once you finalize which action you are going to take, next thing is which stock or what price you are going to buy, correct? So when you enter the price of each stock, let's assume it's just 100 rupees, and automatically you will get a 1:2 risk reward ratio. This is just for your understanding purpose. Let's say if the stop loss, SLTP is nothing but stop loss trigger price, you will get in a stop loss automatically triggered price of 99.50 paisa. If that trade needs to be considered, then you have to get, let's say, auto target of 101 rupees. If you give a sell value, let's assume you are going to sell for, let's say, 105 rupees. Automatically, how much points you have made? 5 points you have made. Now you understood what is the auto stop loss and target. You have also mentioned here as selling price. You will also look at what is the stop loss trigger price which you want to enter it manually. Let's assume if you are bullish but very conservative about keeping a stop loss of let's say 5 points, similar way 95 you are going to keep a stop loss, then this target will automatically change. Previously it was 300, because if it is getting entered to 0, then the target is going to be achieved 300. It will automatically keep 1:3 risk reward ratio. If I am entering 95, then 110 should be your target. Before entering into this trade, you should ask yourself whether this stock will go and hit my stop loss trigger price, or is it going to hit my target price. If it is going to hit your stop loss trigger price, then you have to wait and take an entry later. If it is going to hit your target price, then you can keep the stop loss similar as like this. So it will automatically derive the quantity based on the capital amount which you have given. So let's assume if your trading capital is just 10,000 rupees, you have to take 300 quantities from this share worth of 100 rupees. If you have let's say 1,30,000 capital, then you have to buy let's say 3,900 quantities. So automatically from your trading capital the quantity will be derived, and the total value of this trade, which will automatically calculate your buy value and the sell value and give a total trade value. According to that, what is the break even you should have? 3,900 rupees you should keep it for just break even purpose. Let's say if you are buying 3,900 quantities, then you should keep that 1 point quantities as your break even. After break even, here you will have your profits and losses. Let us understand an opposite of short selling that has happened. You sold it for 95 and it went up to 100 rupees and you made a loss. This time the quantity remains same, but on the break even 3,705 rupees, adding all together you will make a loss of 23,205 with this quantity you have bought. So before entering into a trade itself, you will understand what is the potential of this trade, whether it is going to be a losing trade or a profit it is going to give it to you. So which percentage, what percentage you will get, let's say on the total capital as well as the trading capital. So reason for entering the trade and what has happened later, is it a profit or a loss, you can mention that. If any remarks, you can also add to this. After making these many efforts and entering this data, you will understand, let's say, what is the total capital invested, what has happened in the trade, net profit or loss, what is the percentage of return you have made, what is the maximum profit you have made, what is the average profit, what is the average loss. So we will see this example in a template which I have already created. Let us understand, you are going to buy these many stocks. Let's say I have something around 28 stocks listed here, which is going to which I look for entering in the long term perspective in 2020-23. So let us say from this today momentum, these are all price action based entries. So on a long term perspective, the ABB or the Aditya Birla, Alok Industries, Amar Raja Batteries, Apollo Hospitals, Ashok Leyland, Asian Paints, Bharat Electronics. So something like that, you have different stock prices. So here I have mentioned the stock current price, closing price of today. Let us say you have made entries of, let's say, 28 losing trades, correct? You have made a net loss of minus 87.78%. If everything goes wrong, you have entered buy price, you have also entered the sell price, and the same price has been triggered. Let's assume your stop loss has been triggered all the way here. So let us consider if some of these trades have closed in a positive. Let's say I'm just taking 14 of them and pasting it in the sell values. So what has happened here, all of a sudden your win ratio is 46%, your loss ratio is 53%, which means you have more losers than the winners. So your riding winners are very less, even though your net profit is 28.64 percentage. How this has happened? Just let us go back and understand. We have made our losses very minimal or equal here. As per our trading capital, we are going to enter equal quantities, and we have also going to make the break even point is similar here whenever we are going to make a profit. So you can see that only 43 percentage of or 46 percentage of our trades has went successful, even though if you are maintaining a healthy money management system, you can make 28 percentage returns. So let us assume how much percentage you have to keep it for your stop loss. At least if you do this, you will eliminate 80 percentage of your trading problems. I believe maintaining your quantities, making your losses even, and making your losses straight. If you are entering any trade, make sure you are going to keep the same capital for, let's say, consecutively for, let's say, 6 months time. If you are keeping the similar quantities for any trades, and if you are making your losses even, then even after, if you are making win ratio of just 46 percentage, you can make money about, let's say, 28 percentage. Let us consider here I have just plotted 14 stocks hitting the targets. So I'll just copy paste it, and I'll just make my targets are the selling prices. So here what I'm going to do now, you can see that every 28 stock went up to 100 percentage. So your win ratio is, let's say, 100 percentage, then you are going to make 162 percentage ROI in a year. So just understand the simple logic. Let us go back to the 4 years long-term portfolio and understand this is how you can plan your investment. Do use this trade book very effectively for all your investments and trading purposes. Wish you a happy new year for you, as well as let us make some profitable trades, and let us make our expenditure an investment. This is Sinu Shivkumar signing off from Yuva India Securities. Thank you so much.